News this week was a bit of a continuation from last week, actually. Treasury Secretary Scott Bessent, he gave us some insight into how he can bring mortgage rates down and unfreeze housing like he talked about last week. And it sounds like his plan is to basically shift the government's debt strategy. So as simply as I can try to explain this, basically the U.S. has $300 billion in extra cash to reduce how many long-term treasuries it issues, which could help lower interest rates. And the Fed is also expected to end its balance sheet runoff, which I can explain to you. That'll probably happen mid-year, although we haven't gotten a really firm date for when that'll happen. And they're going to start reinvesting that money into treasuries, and that's another move that could help bring rates down. Now, the latest consumer price index we got, that CPI, it showed inflation's cooling, but again, it's just not enough to get the Fed to cut rates just yet. We also got wholesale inflation, that's PPI, and it came in better than expected as well, but the market just didn't react much to it. It seems like traders are still kind of focused on tariffs and economic uncertainty. But next week's Federal Reserve meeting is the big one to watch for. We know no rate cuts are expected, but their tone is going to influence mortgage rates and give us some idea of what to expect moving forward. We did get more news showing the economy slowing, and retail sales were weaker. That was part of it, weaker than expected, I should say. And that's a sign that consumers are just pulling back on spending. And this could be because, so many have maxed out their credit cards and are having a hard time making their car payments. The job market has shown some cracks as well. So even though we've seen job growth, like we've talked about, a lot of that growth has been part-time jobs, while full-time jobs are actually decreasing. Airline earnings also came in down, and that's partially because fewer people are traveling for work, leisure, and government trips as well. Home prices are still inching up, and with the Treasury's focus on lowering rates, the housing freeze that Bessent talked about could start to kind of thaw in the coming weeks. And next week's going to be a big one with the Fed rate decision, although we know that's likely not going to see a cut. We're going to get housing data and retail sales too. Again, there's pretty much no chance we see a cut, but markets are pricing in 3 potential Fed rate cuts this year, and that could help mortgage rates move lower over time. Basically, the economy's cooling off, inflation's trending in the right direction, and the government is actively working to bring mortgage rates down. And while rates won't drop overnight, these are positive signs for the real estate market in the months ahead. So have a great weekend, and I'll see you next for